quick check-in on the markets right now, and it's pretty much status quo on the index. You do have a flattish move within the broader markets as well, 18,200 being maintained. Names like Hindalco, Divi's Laboratories, Grasim, BPCL as well as Tata Steel are under a bit of pressure. Adani Ports, IndusInd Bank, Britannia, UPL, that's where you're seeing the traction building up. But let's shift gears then and talk about some buzzers in trade. Hindalco's subsidiary Novelis has trimmed their capex guidance, expecting a tough second half on the back of inflationary stress. My colleague Ashesha is here with all the details as to what the quarter was like for Novelis. Ashesha.
Yes, so Novelis, which is Hindalco's wholly owned subsidiary, reported a sequentially weak set of numbers, but this was largely in line with what the street was working with. But the management commentary is quite cautious and they've gone ahead and reduced FY23 guidance on various parameters. Let's talk about the numbers first, where net sales have declined by about 6% on a sequential basis. Adjusted EBITDA has also declined by almost 10% on a quarter-on-quarter basis. Lower aluminium prices and high energy costs is something that impacted the numbers, and hence sequentially numbers do look weak. As far as other internals are concerned, adjusted EBITDA per ton declined by 12% on a quarter-on-quarter basis. Although shipments were flat, we did see a growth of about 2% on both year-on-year as well as quarter-on-quarter basis. Net debt largely remained flat at about 184 million US dollars. Management commentary, as I said, was quite cautious. They said that demand for aluminium rolled products broadly remains solid, but they expect high energy costs and inflationary environment to intensify in the near term, and hence numbers of the next half of the year perhaps could remain weak. As far as guidance is concerned, they have maintained their volume guidance at about 3% growth on a year-on-year basis. Management expects second half of the year to be challenging, and they expect EBITDA per ton to be hit by about $75 to $100 per ton in the second half of the year. So numbers were broadly in line with what the analysts were working with, but management commentary is weak and they have reduced their capex guidance for the year.